Hey guys, I hope you're doing great. So, welcome to the next episode of the Audit Practically series. I know it's been a long while since a video came out of on our channel. Apologies for the same first up. I was a bit held up in certain work commitments. So, going forward, we'll be having a lot of videos coming up, right? And for those of you who are new to the channel, so I'm Arvind. I'm a chartered accountant, and by God's grace, I cleared all three levels of CA in my very first eligible attempt, and I completed my 3 years of articleship in stat audit with PwC Chennai. And right now, I'm working in the financial reporting domain with HSBC. So that's a quick gist about what I'm doing right now. So on to the video, guys. As you guys have seen the title or the thumbnail, the topic for today's discussion is whether an expense can be negative in the first place. You guys should probably be doubting my credentials right now as to whether I'm even a CA in the first place. But guys, let me be really honest with you, right? I'm not joking around. I'm being really honest. What if I told you that an expense can actually be negative? Yes, I'm not joking around. Let me just demonstrate to you, and you will probably agree with me in the next few minutes, right? So what are you waiting for, guys? As always, sit back, relax, and enjoy as we deep dive and dissect this from start, right? Okay. So on to the content, guys. Okay. So let's take a very, very simple example to understand this, right? Let's say we are looking at financial year 2021. Okay. And let's say the electricity expense for the financial year 2021 comes out to rupees 180. Out of which, let's say 100 is the actual electricity expense from April 20 to March 2021. And let's say what happens is in March 2021, a notice is received from the EB department, which states that, okay, the company has actually paid at a lower rate, at a lower tariff rate in the past years, and the cumulative impact of that comes out to 80. And now the EB department is demanding the shortfall, which occurred in the prior years. So this is the scenario under discussion. So what would the entry be passed for the 80? The entry that would be passed for this 80 is probably electricity expense debit 80 to provision for electricity expense 80. I hope that is very clear, guys, because it's a present obligation arising from a past event, and we would be required to create a provision as per Ind AS 37 or AS 29, as the case will be. I hope the discussion is very clear, guys. Okay, let's take the next point, right? The financial statements were approved on May 15, 2021 for the financial year 2021, and the auditor also issued the audit report on May 15, 2021. I hope it's very clear, guys. Okay, so right now you might be thinking, why am I discussing this date? But let's just come to the next point and make it even more clear for you guys. Okay. Let's say on May 30th, 2021, a new party comes to power. Like, let's say in the state in which the company is operating, let's say an election took place, and on May 30th, 2021, a new party comes to power, and they say, boss, I know previously the EB department was probably demanding an amount for the shortfall from you, but since we've come to power for the first time, we probably want to do something for you guys, and we're going to go generous on you, we're going to go light on you guys, and we don't want you guys to be paying the shortfall of 80. So that's what they're saying. So they are basically waiving the shortfall of 80. So when was this information received, guys? This was received on May 30th, 2021, the date after which the financial statements were approved, and the date after the auditor's report. Can this be adjusted, guys? Can we reverse this entry by probably passing the entry provision for electricity debit to electricity expense in 2021 itself? No, guys, we cannot do that because the financial statements were already approved and the auditor's report is already issued. So this probably came to the knowledge after all these events took place, right? So obviously the auditor cannot go back and do this, cannot go back and revise the auditor's report, and the management cannot go and amend the financial statements right now, right? So that's what we are looking at right now. So what will happen is in financial year 21-22, this provision will be reversed because the prevailing government, that is the government which has come to power, they have waived this off. So this will be reversed in the financial year 21-22. So let's say before that, the electricity expense in financial year 21-22, the actual electricity expense come to 70. So for the 80, since the provision is no longer required, the below entry would be passed in financial year 21-22. That is basically provision for electricity expense debit to electricity expense 80, right? So what will now happen is the net expense would be minus 10. I proved my point right here. So the expense can actually be negative, guys. But you might be thinking, okay, this is fine. So how do the comparators look like? So for 2021, the comparators would be 180. And for 21-22, the numbers would be minus 10 because there would be a 70 of electricity expense of 21-22 that is being actually incurred, and an 80 of reversal that would result in a negative expense of minus 10. So I hope this logic is now clear to you guys. But let's say it took some time for you also to grasp this, right? Let's say an investor who does not know AS or Ind AS, how do you expect him or her to grasp this immediately, right? So the standard recognizes this practical difficulty. So your AS 29 or Ind AS 37, whatever be it, what it says is, okay, this approach is perfectly fine. No issues with regard to that. But there is an even better approach that we are saying. You can follow either of these approaches. So what I told you right now is the first approach. Let's just discuss the second approach right now. Let's just discuss what Ind AS 37 or AS 29 speaks about with regard to the second approach. Okay. So what it's saying is, okay, you will obviously be debiting provision for electricity because it is no longer required and you have to knock it off and cancel it off, right? And it is saying for the credit, instead of crediting the expense, credit it to other income, to an account called provision no longer required. What would happen because of this? Because of this, what actually ends up happening is your electricity expense would be your electricity expense would end up being 70 for 21-22, and for 2021 it would be 180. It would not be a negative number. And in your other income for 21-22, you would end up having a number of 10. So this is how your financial statements would look like. Sorry, other income would be a number of 80, guys. So this is how your financial statements would look like in this case, guys, when you're following the second approach. The second approach is more foolproof and more easily understandable to an investor, because an investor would get bamboozled by the fact that an expense is even negative in the first place. So most companies actually follow the second approach to make it more investor friendly and to make the financial statements more lucid and easily understandable, right? So what your AS 29 or Ind AS 37 says in this regard is that you have to follow this approach consistently. In the sense, let's say you are reversing one provision to other income. Let's say you also have an employee bonus provision. You should also be reversing that to other income. You cannot probably reverse your electricity provision to other income and your employee bonus provision to the expenses. So if you're reversing one provision to other income, you should also be reversing the other provision to other income. Or let's say you're reversing one provision directly to the expense, the other provision should also be directly reversed to the expense. So that is what we have discussed right now, guys. So the key takeaway is that an expense can actually be negative, and here's how we dissected this, and here's how we discussed this. So for more interesting videos like this on our channel, guys, do hit that subscribe button and do stay tuned, and do check out the other videos also on the Audit Practically series playlist on our channel, guys. There are a lot of insightful videos. There are a lot of underrated videos where we are going to be discussing some real life aspects like these, and more videos are also coming up, and stay tuned, right? Cheers. Thank you. Keep learning, keep growing.